The Agenda with Steve Paikin is made possible through generous philanthropic contributions from viewers like you. Thank you for supporting TVO's journalism.
Stratospheric housing costs amidst shifting housing needs. If you're fortunate enough to have the choice, is it better to rent or buy a home right now? We'll debate that tonight. Then, just what is driving the apparently endless rise in home prices? Economist Mike Moffat gives us the backstory. It's Tuesday, May 11th, and that's tonight on The Agenda. Household budgets are finite, but house prices still just seem to be going up and up and up. If you're looking for a new home, does it even make sense to buy? Or has the time come when renting is actually a better financial bet? With us to weigh the choices in the provincial capital in Seton Village, Shannon Lee Simmons, certified financial planner and founder of the New School of Finance, and in Midtown, Benjamin Tal, deputy chief economist of CIBC World Markets. And we're grateful to have you two on tonight for what is a very, very timely conversation. I know there are so many people who are watching us tonight who are wondering, buy, rent, neither. They're pulling their hair out. They don't know what to do. Let's just get this on the record off the top. Shannon Lee Simmons, do you rent? Did you buy? What are your accommodations?
I rented for a very long time, frustratingly, in Toronto, and then eventually I bought our house from my landlord, and I don't know that I would have been able to buy in Toronto if I didn't have that very unique circumstance. So I make that very clear with people because otherwise it feels like, how can you do this?
Okay. Benjamin, how about you? Do you rent? Did you buy? What's your story?
No, we did buy a long time ago. Prices were much more normal back then. Since then, of course, they went up very significantly. So today, I don't know what I will do, but back then it was a clear choice.
Well, that was the key follow-up question I was going to ask, which is, if presented with the same set of circumstances today, are you clear in your own mind that you would be buying today as you did back then?
Not very clear, quite frankly, because I think that prices are crazy, quite frankly. And I believe they will continue to go up. So there is an affordability issue here, and you have to make a decision what kind of life you want to live. So I'm not so sure I will be buying now, but that depends on the specific situation of a person. The point that I'm making basically is that we have to break the negative stigma associated with renting. Basically, I want to create a situation in which you are 35 years old, you are married, you have two kids, and you are renting. Nothing is wrong with you. That's the way we should look at renting, the way it is in Berlin, in London, or in Manhattan. And you know what? If you think that Toronto is unaffordable now, you wait. This is just the beginning. It will be even more unaffordable. And that's why rent must be part of the solution. We cannot talk about just buying a house and maximizing the propensity to buy a house like something is wrong with not doing that. I think we have to change the way we think about it.
Shannon, there are people who live in New York City who think there is absolutely nothing wrong in their 40s, 50s, 60s with renting. And they live in Manhattan Island and it's all A-OK. How is it that we somehow got it into our head that to live in perhaps the most expensive city in Canada, I guess it's us or Vancouver, somehow it's scandalous if you're in your 30s or 40s and you're still renting?
Right. I think that, I mean, anecdotally, I hear this from clients all the time too. I think this is maybe the first generation where that's happening, where if you compare to cities like London or New York, there's been several generations of, people that grew up in rental flats and rental places, and then they just assume that that's normal. Whereas a lot of the people who are like the millennials that are trying to get in, they didn't grow up necessarily like the ones who are really passionate about home buying. Maybe that's not how they grew up, or maybe this is the first massive generation that's moving through and assumed when they were younger that they would own a home, and now they're adjusting those expectations for the same time. So I think it has something to do with expectations not being met of what you were told your whole life, and then the economic and financial reality of like what it is today. And I don't know that it's always the best decision to buy anymore, given the prices and where you want to live.
Well, let me pursue that, Benjamin, with you. If, as you have said, you are quite convinced that housing prices are going to continue to go up and up and up by dramatic amounts, even as today you call house prices crazy, if you can get in and purchase now, should you?
Well, it's a question of what you want to do, the way you want to live. It's very specific. You cannot really give a blanket answer here. But I do believe that from a long-term perspective, house prices in Canada and in Toronto in particular will continue to rise, not at the rate that we are seeing now, which is unsustainable, but the demographic story and the supply story still suggest that house prices will rise. Now, the question is how quickly? And that's a function of what we do. Because the reason why we have this conversation is because of the fact that rent must be part of the solution. If you have more people having more choices to rent, then less people will be buying houses, and therefore demand will go down, supply will rise, and maybe we will stabilize at a reasonable level. So it's not written in stone where prices are going and how quickly. It's a function of what we do, but we need leadership here. We need policies, and we need to think about rent as part of the solution. So it really depends on what we do in the future. At this point, everything that we do is we are trying to fight supply issues with demand tools. We are doing all those stress tests and all kinds of other things, while the real issue facing the Toronto, the Ontario, the Canadian housing market is the lack of supply. And that's the number one reason. If we don't fix it, that will not go anywhere. And part of fixing it is providing a better supply of rental units, better options here.
We are going to come back later in our discussion to the issue of government policy and what that can do to help. But Shannon, I still want to get you on the record on this angle of the story. If you can make it work, if financially you can make it work, if you're not going to be spending 90% of your income on housing, and that you can do it reasonably so, is it still the philosophy that you urge people to buy if they can?
I do, but there's so much that goes into that. So just listening to what you even said, as long as you can afford to, which means you're not overspending on your fixed expenses, there's still ample room in your budget every single month for a regular life and to save money for retirement outside of just relying on your house. If you're in that situation, then homeownership can be great because number one, you're forced equity that you're building every single month by paying down your mortgage. And if housing prices do continue to rise, you're going to partake in that growth as well over time. And second of all, you could use it as collateral, as leverage later on. You can downsize. There are more options, but it's not the only option. So, when I'm talking to people, I usually say, if you can afford it, I do think that, buying something can be a big part of that wealth pie. But the real education comes around. The real choice matrix I see is being house poor and buying versus renting smart. And that's where I change my tune, because that's really the choice where a lot of people find themselves. Because if we can all afford to buy and still do all the things, then why not? But it really comes down to being house poor versus renting smart. And renting smart is, I completely agree, is critical. But there are lots of issues that people come to me with their fears about renting for the long term that we can talk about later with like policy that might be able to help on that.
Sure, but let me. I want to better understand what house poor means. So let me do a quick follow up with you on that. I know once upon a time, you aimed to spend about a third of your income on your mortgage. That was sort of the benchmark you wanted to hit. So today, if you don't want to be house poor, what's the sort of reasonable maximum you ought to be aiming to spend on a mortgage as a percentage of your income?
So I think that still holds as a rough, if it's coming in around 35% of your take home pay, it's likely that you can probably float the rest of it. But there's so much more that goes into that. So I find that that's just like a jumping off point. So when I'm running those numbers with clients, I'm looking at all of your fixed expenses. So not just the housing, the insurance, the property tax, the utilities. What about life insurance? What about disability insurance or health insurance that you're paying? What about, you might have car payments. What about if you're going to have future children and they're going to be in daycare and there's $1,000 a month to $2,000 a month going out? So there's lots of other fixed expenses in our life that doesn't get put into the total debt service ratio calculation that, a lender is going to use to give you a mortgage. So when I'm looking at someone to say, are you house poor? I'm looking at what are those fixed costs of your life that make you feel safe and secure and happy. So even whether or not that's even a gym membership, that matters. If you can't do that and that was a huge hit to your lifestyle, you're going to feel that if you can't do it, and you might do it anyways. And then we're looking at credit card debt. So looking at those fixed expenses, then also making sure that there's enough disposable income that you can feel like you can live a normal life for yourself. So for some people, that's much more than others, but a mortgage is 25 to 30 years. You don't want to have to be on your best financial behavior for decades, because eventually what I've seen time and time again is that overstretch, the assumption that you're going to make more money later on, but the amount of income that's coming in doesn't go up by enough to kind of combat the cost of living that and like lifestyle inflation that can happen. And then you have people that are going into credit card debt. So long and short of it is, house poor means there's not enough money to put aside money for retirement in addition to paying your mortgage, and that you're so tight every month that you feel like you're constantly in a state of credit card debt. So, it goes up by 3,000, you hammer it down. It goes up by, 1,000, it hammers it down because you can never get ahead in that emergency account. That's house poor.
Gotcha. Okay, Benjamin, obviously one of the key questions everybody asks themselves when they go to buy a house is what's it going to cost to get money? And we know that interest rates are historically low right now. We also, mind you, heard the American Treasury Secretary, Janet Yellen, musing the other day that, if the economy takes off big time in the United States because of the Biden stimulus package, potentially she has to look at higher interest rates in the future. What do you tell your clients right now about what interest rates are likely to do over the next year or two?
Yes. So first of all, let's go back to the previous question regarding how rich you are before you buy a house. Actually, when you buy a house, the eve of buying a house, that's when you're actually very rich because you don't have debt and you're relatively young and you probably don't have kids. So when you look at this cost, don't assume that that's your cost. Your cost tomorrow, when you have kids and when you buy a house, is like much more than what it is now. And that's a mistake that many people make. That's one thing. The other is, of course, interest rates, because as you suggested, they are historically low, and you cannot make plans based on those kind of interest rates. Now, if you're under the age of 30, you probably are unfamiliar with the word inflation. But there is a word in the Canadian language, in English, it's inflation. It's there. I checked in the Oxford Dictionary, still there. And it was missing in action for 30 years. And you know what? We don't know. We print money like there is no tomorrow. The government is spending. We are all familiar with the story. So clearly, when you print money and when people start spending, there is a risk of higher inflation. And let's face it, nobody knows. Nobody knows, including the Fed and the Bank of Canada, how sticky this inflation will be. We don't know. We don't even pretend to know, which means that there is a risk that those interest rates will be rising. The Bank of Canada is already telling you that they will start raising interest rates in, let's say, late 2022. It's a guess. They don't know, but they might start raising interest rates. Clearly, long-term rates started to rise. The 5-year mortgage rate started to rise. That will continue, especially if we have inflation. We are going to see a very strong economic growth in the second half of the year when people start spending this mountain of money that they're sitting on. So there is a risk that inflation will rise, that interest rates will be rising, and that's normal because that's where we should be going. So when you make your plans, think about that. And I know that there is all kinds of stress tests, but reality, you have to make sure that you can live with interest rates that are, let's say, 200 basis points higher, 2% higher than they are now. And we have to remember one thing. People say, that's extremely important, yes, they will rise, but they will remain very, very low. I remember in the 90s when interest rates were 12%. Irrelevant. 100% of debt in Canada was taken in a low interest rates environment. So when they start going up, the effectiveness of higher interest rates will be much more significant than any other time in history. So our sensitivity to higher interest rates went up because of this element of debt. And that's extremely important to understand. Every basis point counts. I estimate now that 1% increase in interest rates today is equivalent to 2% increase just 10 years ago. So the effectiveness of monetary policy is rising, something to remember.
Mm-hmm.
Very interesting. Shannon, I am sure that it will come as no surprise to anybody watching this or listening to this right now that house prices in Toronto are going through the roof, and everybody sort of understands and expects that right now, and they make their calculations accordingly. I suspect what they are extremely surprised at is that you can go an hour and a half southwest of Hamilton to a place called Tillsonburg, which starts with a T, but is not like Toronto in any other way. And home prices went up year over year there in Tillsonburg by 40%. Does it make sense to you to lock in a mortgage at prices that could very well go down from here as interest rates go up?
Does it make sense? That's a big question. So I think nobody knows exactly where housing prices are going to go depending on where you are. We can make our best estimates. So my advice to people always is, yes, there is a low interest rate right now, which does allow an opportunity for people who may have been sitting on the sidelines waiting to make a move. The pandemic has really helped people to be, location decentralized. They don't have to live in Toronto anymore and still maintain the same income that they had before. So what's happening is it's putting all these other places outside of the GTA on the map for the first time as a realistic place that you could buy a home and still keep your wage. And so if there's a situation where you don't want to live here anymore, you want to live somewhere else, and yes, there's been a massive increase and maybe that's not sustainable, maybe the houses could correct, maybe it would go down, but if you're buying it for a 25-year, 30-year lifestyle, like this is where you're going to plant roots and live forever, then don't get caught up necessarily in what's going to happen on a 3 to 5 year basis with housing prices, because you're not buying it to flip it, you're buying it to live in, and retire in maybe one day. So I think that trying to make those kind of predictions is really hard. And so, but the one thing I would say is that for those people who are expanding their looking outside the GTA for the first time because they are now fully remote and they might be fully remote indefinitely, just making sure that you actually want to live in the place that you're moving to, because if prices do correct in strange ways, which they may in the future, and you would like to come back into the GTA, if prices have continued to rise here too, it may be that much more difficult to do. So I always say, don't look at the short-term market timing of the real estate market, trying to think about buying a house as a long-term strategy, and so it can handle any volatility, which would be the same advice as I would give somebody investing in the stock market.
Now, Benjamin, I know we touched on this a moment ago, but I want to return to it, and I really want to hammer it home because, as we say, there are people living in New York City who don't find it embarrassing at all that they rent because they know they just can't buy. That is just the nature of New York real estate. How do you change the culture of thought of people in Toronto who insist that somehow they're entitled to be able to own property, or they surely ought to be able to own property in Toronto because, after all, their parents and grandparents did, and therefore they should be able to buy, and renting, God forbid, we should never have to consider that option?
Yes. So first of all, let me go back to the previous questions about what I call the Toronto refugees, the ones that left Toronto. So if you put it in perspective, if you look at the overall transactions, real estate transactions, the GTA, and around 300 kilometers around the GTA and very close areas to the GTA still account for 95% of all transactions, despite this trend that we have seen. So Toronto is still the center of the world. That's the way it is. And you know what? And I believe this trend might reverse itself, because people who moved out of Toronto were under the impression that they will be able to work 100% of the time from home. Not sure that will be the case post-pandemic. Second is that maybe your current employer is okay with you doing that. What about your future one? So that can impact job mobility, if you wish. So I see a situation in which some people actually will be renting a condo in Toronto, staying there over the week, and then go back to their home. It will not be as clear, and this trend will slow down the way we have seen in other centers. So that's this point. The other point regarding, how you convince people, you do it by providing more supply. When you make more affordable rental units available. And I think the only solution to that is not the condo market. Now, most of the rental market is the condo market, and the condo market is the rental market with a lot of investors. That's fine. But if you look at the next wave of renters, there are going to be families with kids. There are going to be older people downsizing. They don't want to deal with a landlord that tomorrow will have to ask them to leave because his daughter or son coming back from university. You need stability. You need stability. You need to deal with a company. You need purpose build. The solution to the affordability crisis in the GTA in Toronto is purpose-built apartment buildings rental. It's starting to move, it's starting to rise, but it's really very slow and very small compared to the stock of condos that we see around us. That's the solution. The more this kind of option is available, the more it will be acceptable to people and change their mind. That will take a while, but I think education and more supply will do the trick. That's the way I see it.
All right, Benjamin, follow up on that if you would. Do you think that we have the government policies in place today from the province of Ontario to encourage the kind of quick and significant construction of purpose-built rental that we clearly are going to need now and in the future?
Not even close. Not even close. That's the issue. That's the issue. We need much more than that. We have to make it attractive to developers to decide to go with a purpose build as opposed to a condo. Remember, condo is simple. You build it, you actually pre-sell it, so you have the money, you get the financing, you build it, it takes 3, 4, 5 years, and you basically forget about it. No commitment whatsoever. Purpose build is commitment. Is something that you will be with for a long period of time, and you need to come with a different model. In order to do so, you have to attract developers to do so, and there is a lot of money willing to do so. You just need a bit of a break. So we have to be much more creative in a way to provide those kinds of help to developers to make it economical to actually start building. At this point, the only way it makes sense is if you own the land. If you as a developer owns the land, then you can make money out of purpose build. Otherwise, you can't. So we have to think in different ways how to encourage them to actually increase the supply and make it approachable to everybody.
Shannon, can I get you on that? Do you see policies coming out of the current government of Ontario that encourage enough purpose-built rental accommodation to be built?
No, for the exact same reasons. I couldn't agree more with everything that was just said. And I think just one thing that I would add on top of that I hear from people who feel completely priced out as one of the detriments, you've already mentioned this, is that stability piece. So, you know, if your kids start going to a certain school, you don't want to all of a sudden wake up when they're in grade 6 and have to move jurisdictions and then be subject to market rent, that your whole financial plan was based on this rent, and now everything gets blown up and you have to move your family. So that is why people will light themselves on fire financially to buy a home, for that stability piece. So I completely agree that that's like top of mind as far as the purpose-built rentals, is that dealing with a company where you know that you can live there as long as you want to is going to be a huge piece that policy needs to be creative to solve that problem. And the other thing, when we think about New York, even the idea of rent control, I think that's huge. And so the idea that you could build an entire financial plan based on a certain, you know, amount of rent that goes up with inflation or goes up, you know, in some trajectory, so that there's, you know, everybody, it still works, the model still works, but that at no point could there be ridiculous increases in your rent that just throw your whole financial plan just completely off the table. Because it's those two pieces of instability that make people balk at renting, and they feel like scared of it for a lifestyle forever if they're trying to build wealth over time and they're trying to provide stability for their families. So for me, those are the two pieces that are key, that creative policy is going to have to come up for all the reasons that were just mentioned. I really couldn't agree more.
Okay.
Let's discuss rent control, because I think that's very, very important.
Sure.
That's key. And there is a Swedish economist, left wing, and he basically said something like that. Rent control is the best way to destroy a city, maybe besides bombing.
Right, I remember that.
And the question is whether or not he's right. I totally understand where it's coming from, because he's basically saying if you have rent control, nobody will be building, and you're punishing future tenants and basically helping current ones. So that's something that we have to deal with. So I agree that we have to have some sort of a cap, some sort of maximum increase in rent,
Right.
but at the same time, it cannot be like only inflation. It can be, depends on the situation. And that's why I think that the more supply you have, the less rent control will be an issue, because prices will be going down, rent will be going down because of increased supply. And that's why supply is so important. Just applying rent control will simply punish future tenants because availability will not be there. Very important to understand. And then we have to start thinking in a more creative way. For example, when you pay rent, you pay all inclusive. So some people say, well, all inclusive, wonderful, I can do whatever I want. Let's break it. Let's say, okay, how much is real rent and how much is all the rest? And then maybe if you know that you're paying for utilities and electricity, you won't spend or waste this kind of, this amount of electricity during the summer or the winter, because you know that you're paying for it. That's one thing. The other is you can get some non-profit companies involved in the equation. Maybe they can actually rent the all units and then sub-rent to tenants because they understand those tenants better. There are many ways of actually making the situation more dynamic. At this point, it's not moving anywhere, and that's the issue.
Okay, a little over 5 minutes to go here, and I want to pivot to a bit of a conversation on how housing purchases are no longer, it seems, about having a place to stay. They have become investment strategies, and for some people, they have become retirement strategies as well. And Shannon, maybe you could pick up the story there. There are clearly a lot of, I guess, boomers and Gen Xers who are counting on the increase in their home's value to act as their pension plan. It's a retirement strategy. In your view, does that make sense?
Well, I mean, I think if you've been so lucky that you purchased, 25, 30 years ago and you're sitting on $1 million of equity that's tax free to you, then yeah, how could it not be part of that retirement plan strategy? And I think that it's provided a lot of confidence with the boomer generation, that it is part of that wealth appreciation over time, that they can use that. What I see though that's really interesting about that, on the front line, is people don't necessarily want to sell their home and downsize. So the whole time they're like, well, the house is worth this, and we always have the house, we always have the house. But then when push comes to shove, if you're attached to your home and that's where you live, you may not want to actually downsize because housing prices are so expensive. Then you might sell and downsize into something, and you spend quite a bit just to downsize again. So this is also where renting could become a really interesting thing for people who want to capitalize on the wealth that's accumulated in their house and then continue to rent. So I think that it absolutely is part of that plan for people. They all think about it, but whether or not and how they extract that equity from their house is a really personal decision and a very emotional decision when it comes to retiring. And the other way that I see real estate helping with retirement plans that's really taken off in times when interest rates are extremely low and housing prices have skyrocketed. So I saw this a lot in 2016, 2017. I'm seeing it again right now, is people who own already. Well, now they get their house reappraised. It's worth several $100,000 more. They borrow cheaply on that equity on their primary residence, and then they use that as a down payment to purchase an income property. So now they're kind of double dipping into the real estate market, and then they're creating some sort of, short-term rental, whether it's Airbnb or even creating maybe a long-term rental for someone else. But again, that's what I see a lot of. And so a lot of people are using that as a retirement strategy. So that not only do you have your primary residence, this other address that's going to provide income to you in retirement. If you don't have a pension, it could replace that kind of income. So I see a lot of that.
Benjamin, do you know when we, as a society, seem to change our mind and started regarding our homes not as places to live, but rather as retirement income or a pension strategy or an investment strategy, something like that?
Well, it has been happening for a while now, and as long as prices go up, that will continue to be the case. We looked at the GTA, for example, at condo investors, and we found that about 35% of them are in negative cash flow. Basically, they lose money on a monthly basis. They still do it. And when we ask, why are you doing it? They said, no, you don't understand. We're not losing money. Somebody's paying part of our mortgage, and the property value will rise over time, and that's something that will contribute to our well-being in the future. We have to remember that many of those investors are buying those units, because they believe that over time the value will rise, and they're probably right. Also because of the fact that they know that they were lucky enough to get into the real estate market in Toronto 20 years ago. Their kids are not. So they're trying to ensure that their kids have an option to live in Toronto by buying those condos. So I totally understand that it's happening more and more and more. And that's something that will continue to be the case when it comes to the condo market. So overall, we see a huge amount of help from parents to kids. We see a situation in which gifting went up by 30-40% over the past year. Parents are being used as guarantors on a regular basis. So clearly, parents are helping their kids basically to get into the market, which, by the way, is widening the income gap in Toronto and in Canada, because only parents that can do that, which means that kids that don't have wealthy parents cannot do that. That's another aspect, unfortunately, of the situation.
Right. Shannon, let's pick up on this now. I think you referred to this earlier in our conversation, that when you sell your primary residence, you don't have to pay capital gains tax on that sale, which is a part of the tax policy system that renters would argue favors homeowners as opposed to renters who don't have similar kinds of tax advantages in their lives. I wonder as a result whether or not the federal government, for example, ought to consider offering renters similar kinds of advantageous tax circumstances, like, I don't know what, maybe expanded room in their tax-free savings accounts or something like that, in order to compensate for the fact that they don't have the advantages homeowners do. What's your view on that?
Yeah, I think that there really just needs to be some creative problem solving. Like it needs to, we need to give renters an opportunity to feel that they have equal skin in the game to save financially on a tax-free basis. So that's really interesting, the idea of, expanding tax-free savings account if you're renting. I don't know how realistic it would be to enforce that, but also the other thing that I would worry about is, okay, so I've got this room in my TFSA, but I don't have the income to fill it up. So whereas the housing market's just going to go up for some people on its own, I still have to scrimp and save and go without and do other things and change my lifestyle in order to still partake. So it still feels a little bit unfair. I think that there definitely has to be policy around that stability piece. And then I'm not even proponing this. I'm just saying I wouldn't be surprised if we did see some sort of tax on the sale of a primary residence down the road, if there's been a certain amount of growth or something like that. I'm not saying I'm for or against it. I'm not taking a position, but I wouldn't be shocked if I saw that one day as a way to kind of maybe redistribute wealth from that side of things. But I'm not sure exactly. But it's really hard with the rental game to give people that equal opportunity, because if prices for real estate continue to rise at the same level and primary residence is tax free, it really feels like the cards can be stacked against you, because you can save and save and save in RSPs and TFSAs, but if the housing market keeps going up by hundreds of thousands of dollars every 4 or 5 years, how can you compete with that? So it's a real predicament for sure.
Benjamin, in our last minute here, can I get you to weigh in on that notion of what Shannon sounds like she's describing, a bit of a windfall tax on those who just by sheer luck have managed to realize a significant amount of additional money in their lives just because they've hung on to a good house that's appreciated in value?
Yes, I doubt it will happen, quite frankly. And if it happens, it will be at such a high level that it will be totally irrelevant, like you see in the US after a significant amount of gain. So I don't think that will be happening anytime soon. So the question is, how can you help renters to basically achieve some sort of standard of living while homeowners getting richer on a daily basis? And the only solution, again, going back to our point before, is that make rent available, make rent cheap. How do you do it? Increase supply. That's the only way to help renters, not by taxing homeowners. That's counterproductive. It's basically by providing a solution, a rental solution for renters, so they don't have to worry about stability and rent inflation going to the sky. I think that's the only solution that is reasonable, in my opinion.
Benjamin Tal and Shannon Lee Simmons, lots of great advice for our viewers and listeners tonight. Thanks to both of you for coming on to TVO and helping us out with this.
Thanks for having me.
A pleasure. Thank you.
It was not obvious at the outset of this pandemic that housing prices would continue their march ever upwards, but they sure did. With us to understand why, let's welcome economist Mike Moffat. He's senior director at the Smart Prosperity think tank and an assistant professor at Western University's Ivey Business School, and he joins us now from the nation's capital. Mike, it's good to see you again. How are you managing through all this?
I think I'm getting by like everyone else. I've got a daughter homeschooling here with me, but otherwise life is good.
She just made a cameo in the background, I think, which is consistent with pets, spouses, kids. Anyway, lots of cameos being made these days. I want to start out with just a little background, if we can, please, and go back to the 1980s when people who were around at the time may well remember that housing prices also were going through the roof for a good long chunk of time. But then at some point, there was a pretty significant correction, reminding us that what goes up can come down. Can you just sort of revisit that time and tell us how all of that happened?
Yeah, during the 1980s, kind of like today, we had a big population boom. We had a lot of people moving to Ontario, either from other provinces or across the world, and we had a housing boom that went along with it. And one of the things that we saw is when the Ontario economy had our big correction in the early 1990s, a lot of those people moved away. But we had a lot of homes that were built. So there were too many homes chasing too few people. And we saw huge declines, particularly in the GTA overnight, 20, 30% price decline. So I think a lot of people are wondering who remember that time, is this the 1980s all over again?
Well, assuming there is some institutional memory where you are and where I am in Ottawa and Toronto, the two big capitals of the country, do you think there's anybody in government today that remembers that? And is there any particular kind of policy they might want to introduce to ensure we don't get a repeat of that?
Well, I certainly think people remember it. It's tough to know what to do. I mean, what essentially you need to have happen is essentially the number of people wanting to buy a home has to be roughly equal to the number of people wanting to sell a home. And that's very, very hard to control. I mean, right now we're seeing prices going up because for every home that's getting sold, there's two or three or multiple offers for it. So the government needs to find a way to sort of reduce the number of bidders, but not reduce it so low that now there's two homes for every potential purchaser, and that's a really hard thing to pull off. So it's one thing to be able to identify an outcome that you want. It's another thing to figure out what the policy is to get you there.
So in effect, we just got to let the market do its thing.
Well, I think there are things that you can do. So, particularly at a provincial level. So, we've seen British Columbia do things like have a vacant home tax, because part of what's driving up demand right now is people buying second homes. So, yeah, and we're seeing that right now, that people have their home in Toronto, but might be living in a place that they bought in cottage country. So, what you could do is put a tax on those vacant homes to try and get those back on the market, and also try and prevent people from buying second homes. You can introduce various types of speculation tax or foreign buyer taxes. And we've seen these particularly in British Columbia. And they've had some effect, but they haven't been the sort of transformative instrument that people would have hoped to, again, sort of match supply and demand better.
Well, I know the Kathleen Wynne government, the previous government in the province of Ontario, tried both of those measures, I believe. This is admittedly going back 3 or so years now. Do you know whether either of those policies had much impact on the Ontario market?
It did, but interestingly enough, again, there's always side effects to these things. So we saw back in 2017 and 18 when the Wynne government did that, and as well we saw changes at the federal level on homes over $1 million or more, how the down payments and insurance on that work. That did reduce the demand in the Toronto market. We did see a correction in the Toronto market, but it didn't so much eliminate that demand as move it down the 401. So at this time where Toronto prices and Barrie prices and Mississauga prices were going down, we saw this big boom in markets like Woodstock and London and Tillsonburg. So yes, it can have an effect on a sort of localized level, but we have to make sure, okay, are we actually reducing demand, or are we just moving that demand down the highway?
Gotcha. Okay, let's hit the other obvious reason as to why there's so much purchasing going on right now, and that is interest rates are, of course, at historic lows. Can you just give us sort of your professorial Econ 101 take on why we've had such low interest rates for such a long period of time, relatively speaking?
Well, I think over the last almost 20 years, we've had this sort of secular decline in interest rates. And an interest rate is essentially the same as any other price. It's basically the price to borrow money. And we've seen over the last 20 years, as the population has gotten older and we've seen this demand from China, there's a lot of people who want to lend money. Particularly seniors, tend to move out of stocks and towards fixed, bonds and other interest paying instruments. There's a lot of money out there looking for interest, looking for yield, but there hasn't been that much demand for it, particularly as the economy goes digital. 40 to 50 years ago, a lot of that money would have gone into building factories and building, other sort of physical expensive things. that's gone down somewhat. So we have this big supply of money chasing a very small pile of investments. So that's essentially driven interest rates down to the historic lows that we've seen. And that's a global phenomenon. That's not just happening here in Canada.
Now, decades ago, if, for example, the United States put their interest rates up a few points, the conventional wisdom was Canada would have to do the exact same thing, lest we get broadsided by everybody moving their money down there. Is that still the conventional wisdom today?
Yeah, absolutely. That we only have so much control vis-a-vis the Americans. So, if the American interest rates are close to zero, it's hard for the Bank of Canada to deviate too much from that, or it starts to affect bond markets and the value of the Canadian dollar. So that's why across the board, you don't see that much difference in interest rates in developed country. Our interest rates are very similar to America's, to Western Europe's, to Australia's, and so on. And I think that's the only way we're going to see our interest rates go up significantly is if the interest rates in other globalized economies start to rise as well.
And when you saw the other day Janet Yellen, the American Treasury Secretary, muse about the possibility somewhere down the road of raising interest rates, I know a lot of people said she was just, freelancing and we shouldn't read too much into it. But did you?
Well, I think at some point interest rates are going to go up. I mean, our central banks, whether it be the Bank of Canada or the Federal Reserve, they're mostly targeting inflation. And if the economy starts to heat up, if consumers start to spend a lot of money, we are expecting to see inflation drive up. Now, we're already seeing it in some specialized markets, like the market for lumber, for instance, is up about fivefold. As these prices start going up, then the Federal Reserve and the Bank of Canada and other central banks are going to have to increase interest rates. It's just a matter of when and how much.
Mike, I want to pivot our conversation now and talk about what must be a very difficult and complex tightrope that Adam Vaughan has to walk. We had Adam Vaughan, who's basically the parliamentary secretary in charge of the housing file for the federal government. He's a downtown Toronto Liberal MP. And we had him on the program a few weeks back talking about how he's trying to do two things at once, which seem to be contradictory. On the one hand, he wants to create bridges to help first-time home buyers get into the market, but he wants to do that while at the same time not doing anything that would decrease the value of the homes that current homeowners live in, because for a lot of people, it's their pension, it's their investment, it's their future, it's everything. Is that doable? You know the rules of economics. Is that actually doable?
It's going to be hard to pull off, but I think that shows the policy challenge at all levels of government, that a lot of what's going on home prices is essentially zero sum, right? If home buyers are having to pay more, that means people selling homes are getting more for it. So anything that you do on prices is going to be either helping buyers or sellers. And naturally, no politician wants to make enemies of either group. So I think the tightrope there is just to try and say, okay, we recognize that home prices are going high, are getting out of control, but we also don't want to crash the market. So can we just flatten things out? And politicians really don't have that much control. I mean, we saw that in the 1980s, that they couldn't control how house prices went out of control in Southern Ontario. And in the early 1990s, they couldn't control the crash. And I don't think our tools are any better now. So, again, there are things they can do on the margins, but it's hard to be that precise.
You heard the previous discussion, though, in which Benjamin Tal consistently said the only long-range solution to this problem of high housing prices is to create more supply. Do you agree with that?
I absolutely do. And I think if we look at home prices since about 2015 in Southern Ontario, they started to rise right around the time that our population started rising. So, and the two things are absolutely related. So the only way we're going to be able to create some normalization in the market is for every increase in the number of families, you need to have a similar increase in the number of homes. So we're absolutely going to need to see that, particularly in our big cities, particularly here in Ottawa and Toronto as well. That right now what we're seeing is a lot of families having to live far away from where they work and commute. So, we would like to have housing. It's not just the amount of housing, but where that housing is located.
Well, let me follow up on that because you have heard this allegation in the past, no doubt. Some people believe that all levels of government, frankly, from municipal to provincial to federal, they all have a perverse incentive to keep the price of houses going up and up and up and up because, well, for a variety of reasons, but let's just take one. If there's a land transfer tax that gets paid every time a house changes ownership, I mean, governments enjoy a windfall because of that. So do you think they've actually got skin in the game to keep the price of housing going up?
Well, I think they do. Now, they also have different incentives as well because they want to keep, millennials and families buying homes. I don't know, I really don't know if it's, this overarching, sort of plan to keep prices high. I think a lot of it is just a lack of planning. I don't think any politician back in 2015 was saying, okay, you know what would be good if we could, get the prices of a home in London, Ontario to go up 150%. So I think a lot of this happened by accident. A part of it was, a variety of different policymakers at different levels making decisions, and there was no real sort of coordination going on. So I would say it was more lack of coordination than any kind of cunning plan to see home prices double or triple.
Gotcha. All right. Let me just for a second here talk to my good pal Tony Burke and get him to bring up one at a time here a couple of graphs that you shared online from StatsCan. And let's see if we can go through these together. This first graph, and I'm going to describe it in some detail for those who are only listening on podcast and can't see them. This is Ontario's population growth year over year. And essentially, we're looking at the last decade. And the line is fairly flat, actually a bit of a dip as you get to around the year 2016. The population somewhat steady from 2010 to 2014. It's about 125,000 people per year. In 2015, a dip to fewer than 75,000 people, but then a quick increase, and the line goes up, kind of looks like the COVID-19 line in a way, a quick increase to 200,000, stays there for a year, and then jumps again to 250,000. So we got lots of people coming here. Tony, let's bring up the next graph as well. Here's the next graphic, and this is Ontario housing completions by year. And this graph shows that housing supply does increase in that same period from 2010 through the end of 2019, though it's roughly steady, only moving between 60,000 and 75,000 per year. So, we do the math here, and obviously there's a big gap between the number of people coming here and the number of houses being built. And I guess the question is, if you got that many people coming here, they obviously need places to live. Why isn't the second graph, why isn't the number higher?
Well, I think there's a few things. First, we didn't see this coming. If we go back to 2015 and we were looking at the Ontario Ministry of Finance's forecasts or forecasts from the private sector, everybody was predicting that Ontario would grow by about 120 or 130,000 people a year, mostly because that's what it had done for the last 15 years. Instead, what happened was overnight, our population growth rate essentially doubled. That was due to a influx of what we call non-permanent residents. So they're coming to Ontario from international sources, but they're not necessarily here permanently. That's express entry workers, that's temporary foreign workers, and a lot of them are international students. So actually, people like me are somewhat responsible for this because our colleges and universities increase international enrollments. And essentially, we didn't see this coming, or at least most analysts didn't see this coming. So we didn't build the homes necessary to house this population. And furthermore, you can't just sort of pop up a house or a condo overnight. So even if you kind of see this coming, it takes several years for all the sort of planning involved. So that's essentially what happened, that our housing stock didn't change all that much, but our population did.
And if you were therefore going to be planning for not the last 10 years, but the next 10 years, would you infer that we're going to see, again, these large kinds of increases perpetually over the ensuing decade?
Well, that's the big unknown. That's the known unknown. I think we could say that part of what happened in 2016 was a bit of a Trump effect. We saw what was happening in the United States. The federal government made express entry visas easier to get. The 2-week express entry to get more talented tech workers to Canada. We saw that international students were getting a little bit wary of going to the United States. So colleges and universities started enrolling more international students. We don't know what that looks like going forward. Partly we don't know what that looks like because of the Biden administration, but also partly we don't know what that looks like because of work from home. Now are we going to see that influx of students and visa workers if maybe they can learn online or maybe they can work for a Canadian company but not actually be in Canada? So I think that's going to be the big unknown over the next 10 years is, are we going to see this population increase after the pandemic ends? And nobody really knows.
Let me see if there should be another thing on that list. So temporary foreign workers, we've got foreign students coming in. What about people from other provinces in Canada coming to Ontario? What might that represent as part of that list of the population increase?
Yeah, so that plays a role in it. I would say it was about 10 to 20% of the role over the last 5 or 6 years. And it was mostly a reversal of other trends that what had happened from about 2004 to 2016 or so is that Ontario lost somewhere about 150,000 people to other parts of Canada, mostly Alberta and mostly due to the oil boom. Well, when oil prices collapsed back in 2015, the population flow started to come the other way. So we may see that as well. We may see a continuation of people coming to Ontario because we have a relatively stronger economy than the rest of Canada. And some of those just might be returning Ontarians who had worked in resource industries that may or may not rebound at the pandemic ends. So that does play a role. It's mostly an international story, but that, the sort of made in Canada parts are important too.
All right, let me get your take on what has been one of the really interesting developments during the course of this pandemic, and that is for a number of reasons, one of which is people are working from home more often now, and therefore they don't have to live in Toronto like they had to if they need to work in an office downtown. The other is 35 to 40% increase in housing costs, even for places, 1 or 2 or 3 hours drive outside Toronto. That's happening as well. I guess there are people who are leaving the big city to go even 2 and 3 hours away because you can still, even at that inflated cost, you can still get more house for less money in Peterborough, for example, than you can in Toronto. In which case, do we know categorically who is making those housing purchases 1 and 2 and 3 hours outside the capital city?
Well, we know before the pandemic. Unfortunately, our data works with about a 1-year lag, but we had seen a lot of these communities increase their population. Again, I mentioned Tillsonburg. One of the fastest growing places in Canada is Thorold, Ontario, which is in the Niagara region. And a lot of that was families getting sort of priced out of Toronto. What we had seen, and this had been happening for years, but just sort of escalating. A couple of 20-somethings want to start a family. They're living in a 1 or 2 bedroom condo. They have their first kid and just decide, this isn't going to work. So they go find a house they can afford. They do what's known as drive until you qualify, where you get into a car and you go as far as you have to until the house prices are low enough that you can afford to put a down payment on that. And we know it's mostly driven by young families. The most common age to move away from the city of Toronto is 0. It's kids under 12 months. That's the most common age. If you take a look at the 10 most common ages, they're between 0 and 4 and 31 and 35. So that's who's leaving the city, or at least was pre-pandemic. We saw some retirees, but it's mostly young families that are looking to leave 1 and 2 bedroom condos and getting bigger units where they can afford to raise a kid.
I mean, you've been in this province for a long time. As you look at what people are now paying for homes, as I say, in Peterborough or Tillsonburg or Sudbury, I mean, can you believe it yourself?
I can't. No, I mean, I'm absolutely stunned by this. That we bought our first home in London, Ontario, a nice, brand new 3-bedroom home in 2004 for $168,000. We then sold it about a decade later for about $250,000, and I thought we made out like bandits. I thought, 10 years later, I'm like, oh my goodness, we made $70,000 in 10 years on this house. Now we're seeing that the houses go up by $70,000 every 3 months or so. So I am absolutely stunned by what's going on. And again, that was even pre-pandemic. We sold one of our homes in. We've moved a few times since 2004. Back in 2017, we sold our house in London when we moved to Ottawa. And we had multiple bidders, all from Toronto, all with small kids. So I had kind of seen, even back in 2017, this happening, but just this exponential growth in prices that we've seen over the last few years. It's just been absolutely incredible to see a house in a Woodstock or Tillsonburg, going for $700,000 or $800,000.
All right, then. In our last minute, the federal budget, which came out not that long ago, had a couple of measures that they hoped would affect housing affordability in the short run. I'm not sure analysts are that impressed with what the federal budget had to announce on that front. But just in our last minute here, how do you see the story ending, if that's the right word to use?
Well, I think we're going to have to see more at a provincial level. The federal's hard because we're talking about 40 to 50% price increases, but we're not seeing that in Alberta, Saskatchewan, and Manitoba. This is not exclusively a Southern Ontario thing, but it's primarily a Southern Ontario thing. So I think, ultimately we're going to have to see action from provincial governments and municipal governments because this is such a localized problem. That said, I do think that there's more that the federal government can do around speculation, around vacancies and so on. So there's a lot more to be done.
That's Mike Moffat from the Ivey Business School. Mike, it's always a delight to have you on our program. Take good care, okay?
No, thank you for having me.
And that is the agenda for Tuesday, May the 11th, 2021. Tomorrow on the program, India, which went from having COVID-19 nearly under control to the worst crisis in the world in mere weeks. We'll take a look at what happened. I'm Steve Paikin. Thanks for watching TVO, for joining us online at tvo.org, and we'll see you again tomorrow.
The Agenda with Steve Paikin is made possible through generous philanthropic contributions from viewers like you. Thank you for supporting TVO's journalism.
The Agenda is always on. To catch up on conversations from this week or any week, visit our website, tvo.org/theagenda, or our YouTube page at youtube.com/theagenda. It's all there for whenever you want to watch.